Hello everyone. I'm Lekha. I'm here to solve problems on third case of hire purchase. So today we'll learn how to analyze that it is the third case of hire purchase, how to solve the problem, how to analyze the question and etc. Let's analyze the question. Lekha Offset purchased an offset printing machine from Ramson's Missionary Corporation on 1st Jan 2004. So your Lekha Offset is considered as hire purchaser. Ramson Missionary is considered Ramson's Missionary Corporation is considered as hire vendor. So they purchased a Lekha purchased printing machine on hire purchase system. Okay, the hire purchase price of the machinery being 1,40,000. So here only you can identify that it's the third case of hire purchase. If they have given you hire purchase price, what do you mean by hire purchase price? I'll tell you. Hire purchase price is nothing but the price which includes the profit. Okay, here the profit is interest. The profit is in terms of interest. So this hire purchase price includes the interest. Here the hire purchase price is 1,40,000. So here only when they have given you hire purchase price, you have to identify that it is the third case of hire purchase system. So to be paid as follows. So they have given you down payment, that is 24,000. So at the end of the year, they are paying 37,600. At the end of second year, they are paying 38,800. At the end of third year, they are paying 39,600. So this is 3 installment they are paying, and this is down payment amount they have specified you. And they have given the rate of interest being 10% per annum, depreciation at 10% per annum on return down value method. Ascertain the cash price. So in this method, you have to ascertain the cash price of the machine. Write up the necessary ledger account in the books of hire purchaser. Here hire purchaser is Lekha. So in Lekha, you have to write the ledger accounts in Lekha Offset purchaser account. So first let's calculate the cash price. For that, the column you require is particular installment interest cash price. So in last method, you observed that there was here you find it cash price and here you find it installment. But here you find that this column includes the installment and this column includes cash price. So now let's analyze how to solve this question. So you have to analyze the cash price here. So first let's start with the last year. Why? I'm going to show you example of last sum. So you can see that this is second method of hire purchase system. Here we calculated by using we subtracted the interest from installment amount and got the cash price here. So now in third case, we don't have interest amount, we don't have cash price, we have only installment amount and the down payment. So now we have to calculate on basis of that. But I'm here explaining that on this price you will calculate the interest. We don't have this price. Or here you calculate the interest based on this. We don't have this price in that. So this is exactly the cash price, but there we have hire purchaser price. But here we have cash price. So we don't have cash price and we have hire purchaser price, we don't get this price. So to calculate this price, we have to calculate I'll show you. We have to calculate by calculating it from the end. We are calculating it from the end. I mean, we'll go from last year. So we'll pay at the end of the year. We are paying the installment amount. So if here I'll show you here. Just a minute. So 31st 12 2004 you're going to pay first installment, and 31st 12 2005 you're going to pay second installment, and at the end you're going, 31st 12 2006 you're going to you are going to pay third installment. So now we are starting with the end, so we'll take this date, third installment. So I'll show you, starting it from the last installment. So I'm writing this date, 31st 12 2006, third installment. So third installment, you're paying, how much you're paying? 39,600. First entry the amount 39,600. So you calculate interest on it. Interest is equals to 39,600 into 10. So they have given you interest 10% per annum. But this price includes, this is also a hire purchaser price, which includes both profit, that means the interest. So if you want to calculate the interest on the price which already includes the interest, so you have to there you would take 10 divided by 100, but here in this case you have to take 10 divided by 110. You include the profit here so that you can get the exact amount of profit. So I'll calculate it here, 110. So you'll get 3,600. So subtract 3,600 from 39,600. You'll get 36,000. Okay, you got the cash price of first installment. So now let's go for second installment. So that is 5. That is second installment. So second installment you're paying 38,800. They have given you. Calculating interest, you should make sure that you are adding first installment amount and second installment amount, 39,600 plus 38,800 into 10 divided by 110. You should add both the amount and then you should calculate the interest on it. So if you do so, you'll get 6,800. Subtract 6,800 from 38,800. You'll get 32,000. Now you have calculated the cash price for second installment. We'll go for first one. It's last. First installment. This is the last installment we are calculating, as we are going backwards. So you're feeling like that. So first installment, what you should do is, while calculating interest, so first installment you're paying 37,600. So you can take 37,600 plus 38,800 plus 39,600 into 10 divided by 110. So if you do so, we'll enter the amount here, this one, 37,600, and then if you add the whole installment amount, and if you multiply it by 10 and divide it by 110, then you will get 9,600. Subtract it from 37,600, then you will get 28,000. At last, you should take down payment that was paid 1/1/2004. $24,000. If you subtract the down payment should take both in cash price column and installment column. So total you'll get, you just total all the column, then you'll get installment, you'll get 1,40,000, interest you'll get 20,000, cash price you'll get 1,20,000. So if you observe, the installment price as you see here 1,40,000, interest is 20,000, cash price is 20,000. So if you see, cash price does not include any interest, and installment column include both installment and interest. So in the question, the amount they were given was the price which include the interest. So what we did was we found the cash price. We just found out the price which doesn't include interest. So this is the calculation of cash price under third method or third case of hire purchase. So now in the question they have said that you have to prepare the necessary ledger account in the books of hire purchaser. So your hire purchaser is Lekana Offset. So in her ledger book you have to prepare four ledger book. That is, one is hire purchaser account, second one the interest account, third one is asset account, and the fourth one and the last one is depreciation account. The last one is depreciation account. You have to prepare the 4 accounts as per the reference of the question. So this is the hire purchaser account or Lekana Offset account. Here I'll show you. I've already drawn the account, so I'll show you how to solve. Or first I'll explain it. So this is where you'll enter date. This particular, this amount, date, particular. This is a ledger account. I think you know. So now let's know how to entry or how to solve it. Now let's first you have purchased the machinery. So for that you purchased it on 1/1/2004. So let's write by sales account. So you purchased it for 1,20,000, and then you paid immediately. You paid the down payment on same date. So we'll write to bank account. In the bracket we'll write down payment. So 24,000 you paid the down payment. Now next we'll go for first installment. You paid the first, so I'm writing the date 31/12/2004 to bank account as you paid it. So I'm writing to bank account. So first installment you paid is 37,600. I showed you. So now let's write the interest by interest account 9,600. So now add 2 column and then you balance it 31/12/2004 to balance carried down. You'll get 68,000. Balance it 1,29,600. 1,29,600. So I tallied it. So first year installment, those you paid is in the ledger. Now let's go for second year. So first in the starting of the year, let's bring down the balance of last year to balance brought down, that is 68,000. Now at the ending of the year we paid installment. So to bank account second installment. So second installment you paid was, I'll just show you in the, so you have paid 38,800 installment amount and interest is 6,800. So we'll enter in that. So the installment amount was 38,800 and the interest was, sorry, this is by, I'm really sorry, by interest account, we'll get 6,800. So if you want to balance it, so we have to balance it by balance carried down. To balance carried down 36,000, you have to tally the account 74,800. So second year installment is also paid. Now we'll go for third year. So in the starting of third year, we'll bring down the balance, last year balance, by balance brought down 36,000. So here we are paying last year installment, that is third year installment, third installment. Now the amount we'll see. You can see here that the third installment you have paid 39,600 and the interest is 3,600. So we'll entry that 39,600 and the interest is 3,600. We'll write it 3,600. So we'll balance the account. So if you see that, if you add, you'll get the same amount. So there's no need to balance. You have to just enter 39,600. 39,600. So this is hire purchaser account. This is how you have to entry the accounts. Now we'll go for next account, that is interest account. Next account is interest account. So let's solve it. So let's see. First, you have paid the interest in the ending of the year. So I'm writing 31/12/2000 debited to by Ramson's Mission Corporation account. So first year interest you paid was 10,000. So 31/12/2004 it was credited by profit and loss account. That was 10,000. So we'll tally the account 10,000. Now we'll go for second year. Second year also we paid the interest by Ramson's Mission Corporation account. You paid 6,000. You paid by profit and loss account. That was created by profit and loss account. That was 6,000. So we'll tally the account 6,000. Last year we paid the interest by Ramson's Mission Corporation account. That was 2,000. First 12/2005. Sorry. You have to write 5. You have to write 6 by profit and loss account 2,000. So you have to tally it 2,000. So this is interest account, where you see that each year interest from where we debited for where we credited. You can see the information here. This is interest account. Next we'll go for missionary account or asset account. So mission account. Here you can see that I have drawn the columns. Date, particular amount. This is ledger account columns. So now we'll start how to solve. First, you purchase the machinery on 1 Jan 2004 from to Ram Sons Mission Corporation account. So when you purchase, from whom you purchase, you have to write, then the amount like cash price of the amount, and then at the ending of the year you're depreciating the value of machine. So by depreciation account, so you're depreciating on this value 1,20,000. If you observe in the question, just a minute. If you observe in the question, they have given that depreciate at 10% per annum on return down value method. So you have to depreciate the machine at 10% per annum. So let's depreciate it in machine account. So as they have given 10% per annum, so we are depreciating at 10% per annum. So if you calculate, you'll get 12,000. Subtract 1,20,000 from 12,000, you'll get like 1,800. That is balance carried down. Entry it in credit column, as debit column is higher than credit column. So by balance carried down, you'll get like 1,08,000. So you have to tally the account. For that you should write the total 1,20,000, 1,20,000. So first year depreciation is done. Now let's go for second year. First you have to carry down the value of second year's machinery. So 1/1/2005, sorry, 2 balance brought down 1,08,000. The balance is 1,08,000. So on this balance you have to depreciate the machine for the present year by depreciation account. On 1,08,000 you are depreciating the machine. For 10% you will get 1,800 depreciation value. Now subtract 1,800 from 1,08,000, you will get 97,200. That is the balance. So you write by balance carried down, you'll get 97,200. Now tally the account by writing the total 1,08,000, 1,08,000. Now the second year depreciation is done. Now you're going for third year. So to balance brought down, you take the balance of last year down. So 37,200 is the balance. Now depreciate on the balance by depreciation account. So you have to depreciate on the balance. For 10% you will get 9,720. So subtract 9,720 from 97,200. You will get you'll get the balance as balance carried down. You'll get 87,480. Now write the total, that is 97,200. 97,200. Have tallied it. Now you can see the machine account. The value of the machine, the depreciation value and the balance. Value of the present year depreciation and the balance. Value of the present year depreciation and the balance. So this is machinery account. Next we'll do depreciation account, and it's the last account. So this is the depreciation account and the last account you have to prepare in this. So let's start from first, like ending of the year you will depreciate. So here you have depreciate in the ending of the year. So you will depreciate in the ending of the year. To machine account, so the depreciation value is 12,000. If you can see, the depreciation value is 12,000. So I'm writing 12,000. So the same date should be taken here. By profit and loss account, 12,000. Tally it, 12,000, 12,000. Now let's go for second year, 31st 12 2005 to Mission Account. So this is the second year. Second year the depreciation is the 10,800. Let's write that 10,800. It was created by profit and loss account. Profit and loss account is 10,800. Tally it. 10,800. 10,800. 31st 12 6. The last year depreciation value. You can see here 9,720. So we'll write that 9,720. 31st 12 2006 by profit and loss account 9,720. Let's tally it. 9,720. 9,720. So this is depreciation account. There is the each year depreciation value from where it is debited and from where it is credited is given in this account. This is ledger account of depreciation. I hope this video is helpful and you guys understood the problem which I explained. Thank you.